Good morning, folks, and welcome to today's Forex report. It's been quite an interesting couple of days with what you can see here taking place, this very large drop in the euro followed by a big rally. For some trading systems, this is a good thing, for example, my TFD system, but it's been a little tricky from a day trade, swing trading point of view. The first thing I want to do is point out on the euro, we'll come back to this is the hourly chart. First thing I want to point out is what the daily chart looks like, which is probably the most revealing of all of them. And if you just ignore all these indicators, in fact, let me just remove the lines, just ignore the indicators for a while, have a look at yesterday's euro candle. This is the daily candle, and you can see it's a very clear hanging man candle, and this is a reversal candle, and it often takes place near the top of a move. The interesting thing as well is if I draw a Fibonacci from here down to here, this has taken place, let's just zoom in a bit, right at the 61.8% Fibonacci of the move down from that low, from that high down to this low. So this is a key area on the euro. The weekly direction for the euro is short still, according to the G7 system, and we've got this hanging man candle taking place right at the 61.8% fib. The hanging man candle is always a great opportunity to sell or buy if it's at the bottom, because it affords you the opportunity to get in with a tight stop loss. And if you're looking for a longer term position to sell the euro, this is not a bad place. If we zoom into the hourly charts, and I get rid of that, you'll see exactly the same sort of thing, but on an hourly basis. And you can see this last hour here is a little hanging man candle. The one before that was a spike high, followed by this inside candle. Then we had a hanging man candle, and with a bit of luck, the euro will move lower. I'm actually short the euro from this area. I was actually short from last night, from over there, after these three spikes, and it moved down quite a long way, about 95 down to 35 or so. So it moved down about 50 or 60 pips last night. But unfortunately, I'm still in the position, the original position, because I wasn't able to take profit, simply because it's the middle of the night my time. So anyway, it's come back to the same sort of region. We've got another reversal set of candles, spike high, inside candle, and this hanging man candle. So with a bit of luck, it'll move back down again. You can see the stochastics overbought, and we just about reached the top Bollinger Band. So everything's set up nicely for a G7 trade, and I'll be looking for a move back down again. Very erratic trading conditions, as you can see, not so much on the euro over here, but in the last couple of days. And you'll see when we look at the pound's even more erratic. So difficult trading conditions, but no reason why we can't be involved in it. The trick is just to be really careful and to keep your stop losses as small as possible. And that's why the hanging man candles are always attractive, because you can get in with a small stop loss. For example, selling over here, we're selling right at the top of the move, at the top of a candle, and often the stop loss can be as low as small as 10 pips sometimes, but somewhere between 10 and 20 pips. So it's always an attractive candle pattern. I've taught on this. It's the T-junction type of approach to trading, and well, I'm looking forward to a move down. If not, the stop loss is really small, and in these trading conditions, be expecting to lose more trades than normal, because these conditions are erratic. So be expecting to lose more trades than usual, and you might lose 50-60% of your trades. But the key is, if you keep your stop loss small, between 10 and 20 pips, it's more than easily made up for by the winners. And all the great traders will tell you, cut your losses short, let your runners win, and that applies even more to conditions which are erratic and volatile like we've got at the moment. So that's the strategy on the euro, looking to sell, small stop losses. If you lose a few in a row, it doesn't really matter. I know it can be a little off-putting if you're new to trading to lose 3, 4, 5 trades in a row. However, that's the strategy. Small stop losses. When it does go in our favor, we can get 2, 3, 4 times the amount of profit that we risk on the trade. All right, so that's the euro. What I want to do is, before I go and have a look at the pound, is have a look at the dollar yen. So because we are in a trade on the dollar yen right now. So let's go across to there. And let's have a look at what this looks like. Now, this is an interesting one as well, because we've moved down. I showed folks the daily chart of the dollar yen the other day. And let's just have a look at it whilst we're at it. And here's the daily chart. You can see we're really near very long-term lows all the way down here. This is, as you can see, the daily chart. If you look at the monthly chart, for example, we're right down at the lowest levels since 1995 or 94. So we really are at a very oversold monthly condition. Have a look at the monthly stochastic. It's more oversold now than it has been for 5 years. So going back to the hourly chart, there's always a good opportunity to buy a currency like this on dips with small stop losses. And if I have a look at where we are right now, on the hourly chart, we've moved down to the 50% Fibonacci of the move up from the low to the high, and zooming in again, if I can find the reset button, zooming in again, you can see we've got a very small hanging man candle, and even though this has got a low probability of winning, in other words moving higher, because this is a long signal, it's actually an inverse hammer, not a hanging man, because it's taking place at the bottom. So an inverse hammer candle pattern off the 50% fib. The stochastic has been oversold for quite a long time, and it's an opportunity to buy. What makes it so attractive is not so much the probability of it winning. In fact, the probability of this winning could be quite low. It could be as much as only 50%. So really it's a coin toss in a sense, whether this works out as a good trade, bullish trade, or it fails. But what matters is that we've got into this trade with a 12 pip stop loss. And if we do lose the trade, 12 pips is really neither here nor there. It doesn't matter. It's not going to have a big impact on the account at all. It may impact your psychology, and you need to be careful of that. As I said, in difficult trading conditions, you may lose 2, 3, 4, 5 trades in a row, and at the end of the day, you begin to think, well, you start to lose confidence. You start to lose confidence in yourself, your trading system, your interpretation of the charts, perhaps lose confidence in your mentor, whatever it might be. But the point is, you need to be ready to accept in these conditions a string of losses. It doesn't matter as long as you keep your stop losses small. You could win you could lose 3 or 4 trades with tiny stop losses, and that could be equivalent to just losing 1 trade with the normal size stop losses. So be prepared for that, and don't worry too much about it. This is the trade we're in, long on this candle. In fact, we might be out of that by now already. So let's just see. No, it's still in. So the idea here is to take very small risk with a trade that really has a 50-50 outcome, with the idea that a small loss doesn't matter. Very small loss, 12 pips, it's almost nothing, but the potential for gain is many, many times greater than the size of the stop loss. So that's the dollar yen, and let's have a look at the pound. Just need to drag the pound across here, and I'm going to have a look at the Swiss franc as well, in fact, in a little while. So the pound is, let's just have a look at what's been happening over the last, well, since the beginning of February, the last 3 weeks. You can see that we've been ranged sideways in a very messy sort of candle pattern, very messy rallies and collapses. For example, have a look at this one, a nice strong rally which broke through this resistance over here, even broke through that resistance there, broke through all of these resistance levels, and then promptly collapsed back down all the way to the bottom from where it had come. So pound I'm not really interested in too much. I haven't been trading the pound much because of this messy behavior, but if anything, the pound is long today. There were a couple of signals during the Asian session, if you were trading then, to actually buy the pound. Some spikes off the support. It's moved up from there, but we're really trapped between these 3 moving averages, the 200 SMA, 200 EMA, and the 100 SMA. So we're trapped in the middle of these, in between these 3 moving averages, right slap bang in the middle of them, really. So trades are of low probability, and the stop losses have been quite big. So at the moment, as I said, I want to trade as much as possible with very small stop losses, and conditions are tricky. It's been a tough month, but there's no reason, there's no need to feel bad or make excuses or whatever. It's just the way trading is. So when you get into these conditions, make sure that you keep your losses and your risk very, very low from a stop loss point, and make sure that when you do get a winning trade, let it run at least 2 or 3 or 4 times the stop loss that you've got on the trade, and that'll more than make up for a string of small losses. Well, that's it for today. Oh, one more thing. I just want to have a look at the pound from a daily chart perspective. And you can see we've kind of been edging upwards. This is the day chart for the pound, edging higher, but lots of choppiness in these areas over here. And if we have a look at the weekly chart and try and determine the G7 direction, you can see it's still bullish. And so that's last week's candle. So we're still looking to buy the pound on dips, but well, who knows? Anything could happen, as we're kind of ranged on most of the currencies. Anything could happen, and don't bother getting into the pound unless you can get in with a very small stop loss. Let's have a look at the Swiss franc. And this is the weekly chart on the Swiss franc, and you can see just moving down, moving down, moving down. So the dollar is just constantly, since middle of last year, has been losing strength against the Swiss franc. And that's often what happens when well, when there are tricky economic or political conditions around the world. Often people find solace in moving across to the Swiss currency, which is quite normal. But just moving down, even after it looked like we'd made a bottom there, if we have a look at this on the 60-minute chart, you can see we've got a little inverse hammer there against the lower 100 period Bollinger Band. We've got an oversold stochastic. Again, an opportunity to get in with just I think it's a 15 pip stop loss. Not because I think the Swiss is going to go up or down against the dollar, I have no idea. But as I said, I'm taking low risk trades in terms of looking for opportunities where the stop loss can be really small, between 10 and 20 pips, and opportunities to trade off these reversal patterns using a T-junction type approach. So in summary, I'm long the Swiss from this level, very tiny stop loss. I'm long the dollar yen, very tiny stop loss from over here, and I'm short the euro, very small stop loss, and I'm also short the Australian dollar. Let's have a look at that very quickly while we're at it, just to show you what this looks like. So the Aussie dollar, again, you know, who knows, we're underneath the moving averages, so there's a bit of pressure from the top, but we're above the Bollinger Band, the lower 100 period Bollinger Band, so there's a bit of pressure from the bottom. And we've got a trend line here if you really want to have a look at it. We've got pressure from this trend line trying to push it down. However, the point is, in fact, we sold here last night. It moved down beautifully, and again, this was the middle of the night my time, so when I woke up in the morning, it had gone all the way back up again. So that's, you know, the rub of the green. Depends on which time zone you're in. But there's another hanging man candle pattern right there on the Aussie. This again is a high probability, let's say low risk rather, low risk trade. There's the hanging man candle pattern after a small rally, after a tweezer top, and potential for this to move down. Again, very, very small stop loss, and this is the way I like to trade, excuse me, in difficult market conditions. So in summary, short the Aussie, short the euro, long the dollar Swiss, long the dollar yen, all based on T-junction type patterns, and without a clue of which way these currencies are heading during the rest of this day and the rest of this week. But that's the whole point. Trade with very tight stop losses where you can get a good probability trade, but risk almost nothing on the trade. Be prepared to take a string of losses. Don't get disheartened. Don't doubt yourself. Don't doubt your trading system. Don't doubt your mentor. Don't doubt the whole Forex thing. Just be diligent and take the trades. As I said, be prepared to take a string of losses. The market conditions are choppy, volatile, sideways, annoying, irritating, unpredictable, all of those things. So it's got nothing to do with you. That's just the way it is. Take care. Have a great trading day.